Gary Walters.
Hello, everyone. My name is Gary Walters. I am a mortgage loan officer for Prosperity Home Mortgage. Uh, as my bio says, I'm a Texas native. I've been doing loans for over 20 years. And, when it comes to doing a loan, just like Cynthia said earlier, it's all about getting the best product or the best program to fit your needs. What I want to talk about is I want to talk about the opportunity that's available with a couple other programs and a couple other products that may be a little bit more uh, uh, of a benefit for you. So what I'm going to do is go ahead and share my screen. Is everyone able to see that?
Yes.
Yes.
Okay, so we're going to talk about home buying 101, right? Um, More of my information there. Today's agenda is going to be about the benefits of home ownership. We'll talk about that a little bit. I also want to talk about home buying myths and facts, and how do I pay? What do I pay when buying a home, and then down payment assistance. And of course, we're going to talk about FHA loans compared to conventional. Now, what are the benefits to home ownership? Benefits are home equity. You get a chance to build home equity. A lot of times, what I tell people who are renting is that all you're doing is paying 100% interest. You're not getting any money back for that money that you spend when you make that rent payment. But if you own a home, you get an opportunity to build equity. The equity is the principal portion of what's available between what you owe on that mortgage compared to how much that home is worth. So if you have a home that's worth 200,000 and you only owe 100,000, well, guess what? You got $100,000 of worth of equity that you can use for any financial desire you may have, whether it's doing some home improvements to the house, whether it's taking money out to pay off all your bills, whether it's to send your kid to college. I mean, that's what that money is there for if you want to take advantage of it through home ownership. But if you're renting, you don't get any of those type of options because as you're renting, you don't buy in and you don't start building equity when you rent. Another thing about a benefit with home ownership is that you have predictable payments. I talk to a lot of people that are renting, and they'll say, Gary, the reason why I'm looking for a house because my landlord just increased my rent. Well, if you owned your own home, you have a little bit more predictability when it comes to that monthly mortgage payment. Also, you have tax advantages. I've told many clients that, when you buy a house and you start doing your taxes, once you have a home, you'll get a little bit more money back on that tax return. Because you own a property, you get money back off of the interest that you pay on that home. Then also, what I think a lot of people love is that you have more control over your space. When you have your own home, that's your home. You can paint the walls whatever color you want to paint them. You can, make that property fit what you want. And usually when you're renting a home, for example, that landlord won't let you do a lot of stuff because they own the property. You have to keep the walls white and you can't change the color of the walls when you don't own the property. So what's important too, when I talk to first-time home buyers, people that are looking to buy a home, is I talk about the myths that's out there. One of the myths that are out there is that renting a home is always cheaper than buying. We're going to talk about that. Another myth is that you need perfect credit to buy a home. We're going to talk about that. You need a large down payment to buy a home. Not true. And there's another thing that people say, that there's no benefit to using a real estate agent. Well, there's definitely a benefit to using a real estate agent. And Stephanie Span is one of the best ones that's out there. So definitely want to talk about that a little bit at the end. But here in the DFW, the average rent is $1,600 a month, right? So when you are renting an apartment or whatever, you have to pay upfront cost. Usually you have to pay a $1,600 deposit. Then you have to pay $1,600 for the first month's rent. And if you have any fur babies, that's another $500. So the total that you'll pay is $3,200 to $3,700 renting, renting a house. I mean, renting an apartment or renting a house. The upfront cost when you have credit issues when you're renting is that you got to pay the $1,600 deposit, the first month rent. You also have to pay a $500 pet deposit and then an additional deposit at times because you have credit issues. So when you're renting, you can pay $48 to $53 renting. That's a lot of money to pay just to rent a space. And I'll show you guys how if you purchase a home, it might not cost as much as you think it does. And I can give you some examples where it costs less than if you decide to rent a place. This is something that's very important. If you're paying $1,600 a month in rent, in 5 years, you'll pay $9,600 in renting. That could be equity that you could have built in your own home. Half of that money could be available for you in 5 years to use, for, paying off all your debt, to doing home improvements, like the examples I gave you earlier. So what do I pay when buying a home? Let's talk about it. Typically, when you buy a house, you got to worry about three things. I always say three things because most of the time we just say two things, which is down payment and closing costs. But I'll break it down a little bit more. I think you have to worry about the down payment, the closing costs, and the prepaids. These are the fees and costs associated with obtaining a mortgage loan. These are the fees you have to pay up front, okay? So the down payment, like Cynthia mentioned earlier, if you pay a down payment on a conventional mortgage, it's 3%. If you pay the down payment on an FHA loan, it's 3.5%. So it's a little bit higher, but the thing about FHA is that you might be able to qualify better for an FHA loan depending on your situation. The other thing you have to worry about is the closing costs. These are the fees associated with buying the home, and they have to be paid as well, along with the down payment up front before you purchase the home. And then last but not least, you got prepaids. Prepaids are your homeowner's insurance, your mortgage interest, and your taxes that you have to pay when buying a home. So, with those three things involved, you can end up paying a certain amount that could be, I'm just going to give you an average. If you're buying a $250,000 house, it could be around, $16,000 if you add it all up for down payment, closing costs, and prepaids. But that's not the same amount for everyone. I'm just giving you an example, okay? But down payment assistance is a way that many of my clients have been able to lower that amount that they have to pay to get into the house. So there are programs available for first-time home buyers and also for folks that have bought a home before, okay? And what it does with down payment assistance, it helps you with the cost. One type of down payment assistance is a grant program, okay? That's money that you do not have to pay back. There's down payment assistance grant programs. They're available through the city and through the state. And sometimes there's down payment assistance programs available through the lender that you're working with. We have those type of down payment assistance programs available too. Another down payment assistance that's available for most of my clients is a second lien, where you put a second lien behind your house, but you don't have to pay it. It's only payable when you sell or refinance the house, and it doesn't really come out of your pocket. It just comes out of the equity of the home. Then also another down payment assistance is a second lien that's forgivable after a certain amount of time. For example, you can be in the home for 3 years and you will not have to pay it back. That's a down payment assistance program that's forgivable. Another down payment assistance, or most down payment assistance programs are going to be available through nonprofit organizations, through the county, or through the city where you're located. So I advise you to do your research and do your homework to see if there's any programs that might be available that you want to go over with us as the loan officers, and we can talk about it. Also, there's down payment assistance programs with tax credits available. So down payment assistance do have requirements because everybody doesn't qualify for down payment assistance. So some of them you have to be a first-time home buyer. Other ones you don't have to be a first-time home buyer. A lot of the down payment assistance programs have a maximum income limit. So you can't make more than a certain amount of money to get down payment assistance, but that's what we're here for, to let you know how much, the maximum income limit is for each down payment assistance program that you may qualify for. Some down payment assistance programs depend on where the property is located, okay? And then all the down payment assistance programs have a minimum credit score requirement where you have to meet in order to qualify for the down payment assistance. But that's what we're here for. We're here to see what you can qualify for. But I'm gonna give you an example. If you are purchasing a $250,000 house, okay, and like I said earlier, the down payment is $7,500, right? And then you get down payment assistance. Well, that's $7,500 if you get down payment assistance for 3%, which means that you will have zero out of pocket for the down payment. That's a deal. So what that means is that you're purchasing that home and you will not have to pay any down payment because you got down payment assistance. Another example is, let's say you buy a house, $250,000, closing cost, it's going to be $2,500, just to give you an example. Prepaids, remember that's your taxes and your insurance and your mortgage insurance, that's $5,500. Then you got the down payment that's due, which is $7,500. So that's a total of about $15,500, okay, to get this house. But let's say you sit down in front of me, I go over your information, I'm like, hey, you qualify for down payment assistance. I can give you 5% that will go towards your closing costs and your down payment and your prepaids. And 5% of this particular loan amount will be around $12,125. So now, instead of having to bring $15,500, if you get the seller, because sometimes the realtor can negotiate the seller to pay some of your closing costs, and then plus you do the down payment assistance, now you only have to bring the closing like $1,375. Isn't that a lot lower than if you was renting a place? I'm telling you, sometimes it's a lot cheaper. It costs less than to purchase a home. And that's why we want to talk to you guys today and give you this information. Some more information is the 411 on FHA loans. FHA loans are more attainable for individuals with less than perfect credit, and the guidelines are not as strict as the conventional guidelines, and many first-time home buyers will qualify for an FHA loan when they don't qualify for a conventional loan. Here's the benefits, the pros. You get a lower interest rate. A lot of times the MI payment is going to be less when you have less than perfect credit. Then also the qualifying criteria, it will qualify you for a higher loan amount with less than perfect credit. Sometimes I can give a customer more of a loan going through FHA. Now the cons about FHA is that you will have to pay upfront mortgage insurance premium, which is 1.75%. So that's going to be tacked on to the loan amount. You also have to pay mortgage insurance for the life of the loan. And then also, if you have student loans, for example, 1% of that student loan debt will be counted towards your DTI. So the specifics about FHA loan is that most counties here in the DFW area, the maximum loan amount is $356,362. The high balance loan amount is $822,375. You also have the standard fixed 30, 25-year, 20-year, 15-year term. You can also do an adjustable rate option as well on an FHA loan, which most people don't do because they're concerned about their payment going up if they choose that option. And we could talk more about that as well if that's something that you want more information on. And then also the down payment is as low as 3.5%. Yeah, it's not low as conventional, but 3.5% is a decent down payment when you're purchasing a home. So the other thing that I do want to say as well is that it's important to have a real estate agent to help you. Like I said earlier, you get the right real estate agent, they'll help negotiate some of those costs for you to help lower the amount that you'll have to bring to closing. Me and Stephanie have helped many mutual clients do that and was able to get them qualified to purchase a home. The real estate agent can also help you decide what you want in a home, right? Because sometimes, you know, people come to Stephanie, I'm sure Stephanie, and they don't know what they're looking for. And then you're able to give them some examples and some good ideas of what will be a good property for them to try to purchase. A lot of times the real estate agent will find a house through the MLS, you know, the multiple listing service. So a lot of times when you go on these websites and you see a house and it says it's for sale, sometimes they're already sold. Well, especially here in DFW, they're gone already because that's how fast houses are selling. So you got to have a real estate agent to help you find those houses so you have a better shot of trying to put an offer in on a particular property. They can show you potential homes that you may not be aware of as far as that's available for you to purchase. They provide you valuable information on the community and what's going on in the neighborhood, the tax rates. All that stuff is important and you want to know it so you can make a wise decision on what home you want to buy. They also make an appropriate bid on the home. So they're going to know how much you should offer for a house because they're very familiar with the market and they're going to be negotiating to get you the best possible deal. The real estate agent will work with the loan officer as well so we can really make sure that you're purchasing the right property that's going to fit your need and your finances. And the best thing about a real estate agent is you don't have to pay them. The seller pays for the real estate agent. So a lot of times people will think, well, if I get a real estate agent, I'm gonna have to pay him. No, the real estate agent gets paid by the seller and their goal is to find you the right home and get you with the right seller because that's when they make their money on the deal. So they're looking out for your best interest all the way around. So I always advise to get a real estate agent. And one of the best real estate agents I know is going to be Stephanie Spann. Now, here's the deal. You're welcome. You're welcome. Now, check this out. We talked about renting a home is always cheaper than buying. Nope, I bust that myth. We talked about you need perfect credit. Nope, the average, I know we mentioned it earlier with Cynthia. Same thing with us. 620 or higher credit score. Those down payment assistance programs I told you about, 620 or higher credit score, and you can qualify. Another myth, you need a large down payment to buy a home. Well, I killed that myth to let you know that if you get down payment assistance, get some seller credits, you may be able to get into that house and pay $1,300, $2,000, which is still cheaper than if you decide to rent a place. Then last, there's no benefit in using a real estate agent. I bust that myth, letting you know that a real estate agent is there to look out for your best interest, y'all. I think this is some great information. And I really think, guys, that you are probably more ready to buy a home than you think. So contact me, contact Stephanie, contact Cynthia, and we'll be more than willing to go over some options that we think you'll be pretty pleased with.